Okay, fam, welcome back. So today we're going to be going over the grayscale trust as well as a couple other things. So with that being said, let's get it. Okay, so the S&P and the Nasdaq today were, let's just say it had a very interesting session. So we had another diamond pattern followed by a W pattern. This is kind of really crazy price action, very volatile, up, down, and all around. Made quite a bit of money trading, but the funny part is actually if I had been trading longer, would have made even more money. So, gee, imagine that, right? But at some point, you have a good enough day to where you just got to say, okay, it's time to walk away. It's time to be done. Because just understand, if you make money on the market, there's always a possibility you could end up giving it back. Those people that day trade understand exactly what I'm talking about. Okay, so something I want to point out here on the NASDAQ, I don't want to get too deep into it, but I will say that we are still bouncing off of this. We're bouncing off of this, what appears to be maybe a falling wedge, which again is a bullish pattern. The target would be the top of the wedge. I know this is not the NASDAQ, this is S&P, but it's going to look pretty much about the same on both, okay, with bullish divergence going on here. And I also wanted to show you guys this as well. So it appears that it's barely noticeable. I mean, you literally can barely even see it, but it does appear that we may have just gotten a golden cross where in this case, I want to say that's the 9 EMA. Yeah, the 9 EMA going above the VWAP here. So for those of you guys that don't know what the VWAP is, it's basically volume. It's known as the volume weighted average profile, I think. So it's a tool that essentially measures kind of the average of the price action. And yeah, you basically can see that the price follows it pretty closely. So it's just basically another retracement tool, pretty much. I mean, a lot of traders will use it to go long when it's above or short when it's below, that kind of thing. So anyways, so with that being said, the PPI data did come in, I believe, a little bit softer than expected. So the reaction from the markets was interesting, to say the least. Yeah, so it came in, it was higher than the prior, but lesser than the forecast. So that's quite interesting. That probably explains the kind of up, down, and all around that we saw. Core PPI, basically the same as last time, but less than expectations. So, and then core PPI month over month was obviously less than expected. So, kind of a mixed result there. I will tell you guys this. I think likely that we're probably, I think the bottom is either in or we're probably going to get it tomorrow because, again, tomorrow is CPI. And I did want to show you guys this real quick. So we are starting to finally rebound off of the stocks above the 50-day moving average for both the NASDAQ and the S&P. Now, you guys can see on the weekly time frame, we have been sitting, the stocks above the S&P, we've been sitting on that level for this kind of buy zone, if you want to call it that, for quite a few weeks now. Okay, it's been pushing against there, bouncing off, pushing against there, bouncing off. I think the shorts would be wise to get out of their positions, not financial advice, as soon as possible, because if not, they may get absolutely wrecked in the coming weeks and months. I'm just going to be real about it. And you guys can see the NASDAQ finally almost hit the green box down here. Last time we were this low was back in April of last year. So that was almost 9 months ago. Once again, this is basically just a reversal indicator pretty much. When you're in the buy zone, that's usually a pretty strong indication that a major move up is about to happen. And of course, the Bitcoin miners to some extent are also moving up as well, but we'll talk about that in a separate video. Earnings season is coming up too, so a lot of these miners, Coinbase, MicroStrategy, all those guys, they're going to have earnings. That's probably going to push the prices of all these assets even higher. Now, in terms of Bitcoin, and again, why am I talking about Bitcoin? Well, it's really quite simple. So told you guys we were probably going to have this overcut, undercut, and then we're probably going to rip. Well, the rip part still has yet to happen, but you can see the candle went from red to green almost instantaneously as we're only 2 days into the trading session. But another thing I wanted to point out to you guys is this. Okay, so this whole move is basically just sideways. This is known what we called back here in 2024 for that 6-month period as a pullback in time. Okay, if the price is not pulling back and it's going sideways and the EMAs are coming up into the price while the price is going sideways, That is known as a pullback in time. That is also a signal that another massive launch to the upside is coming. Because I can tell you guys right now, I have seen hundreds and hundreds of times in futures this exact same setup where the price will go sideways into the EMAs and then eventually just catapult to the upside. Okay, so it'll kind of just do nothing. EMAs slowly creep up, and then all of a sudden you get this God candle and things just go stupid to the upside. And the inverse is true also, obviously, for the downside for the bears. Okay, but in this case, this is a bullish signal. It looks not perfectly exactly like this, but you can see the price kind of pulled sideways and back slightly into the EMAs while the EMAs were creeping up. And what did we see after that? We saw a huge catapult to the upside. Same thing here. Went up, kind of had a sideways move into the EMAs, and then boom, took off to the upside. I'll show you another example right here. Went up a little bit, went sideways, had a nice little wick down, and then boom, took off to the upside. I mean, I literally can't even make this stuff up. You guys have seen it 4 times now on the Bitcoin chart since the bear market lows. Okay, so let's get into the trusts. And I still am kind of the mindset that as soon as we get that alt season, like altcoins really start to explode, that's when these are going to start popping off. I think that's what's going to happen. Don't quote me on that, but that's kind of what I suspect. Okay, so LTCN 12 to 18 here for the buy zone. Again, it is at the bottom of the channel. If you're looking to snipe position or trade this, obviously you'd want to get in on the white line or maybe down at this green box or something, kind of in the $7 area. Again, that's more so for position traders. For position traders, basically, they will not, if you're a bull, they'll wait for exactly the bottom of an area they're looking to buy or pretty close to it. Like it's almost like a perfect snipe trade, so to speak, for the maximum upside and the minimum risk. Okay, so that's essentially what's going on there. So the targets would be anywhere from 27 all the way up to 54 here with roughly about 340% gain. Okay, so BCHG retesting these lows down here. You can kind of see it is pushing against both the trend line and kind of these lows of these candles here with the exception of these two. We have this inverse head and shoulders pattern here with a target of roughly about $14 still potentially in play at some point. These head and shoulders patterns can't really, or inverse in this case, can't really get negated, so to speak. The only thing that I think could probably actually happen, and I think I actually probably need to do this a little bit differently because, again, this is the neckline is actually a little off here, so let's redo this. So let's just assume maybe, and it paints an interesting picture too. It also makes it appear that we have some kind of triangle pattern on top of that. So if it breaks up maybe somewhere in February, which seems likely because we have earnings season during then, and Trump will be in office, and the last time we saw crypto go stupid to the upside was right around the end of January, then that would be about the time that I would expect this to play out. So it'd be about $15 for target on this one. So current buy zone here, 5 to about 580 at that green box. I mean, again, if you're position trading, this is exactly what you want to see. So 1250 here going up to 24 on this one. 345-ish% gain. And like I told you guys before, it's only going to take one of two things to get these things to moonshot. Okay. I mean, really, it really only is going to take one of two things. Either the whales move the market or it's some kind of catalyst. I would probably give about equal credence to both, but slightly more to the idea of a news catalyst sending these things to the upside, like Gary Gensler quitting the SEC, or Trump getting some of his confirmations in the Senate, or whatever the case may be. Okay, or some lawsuit going on in crypto getting dropped or something like that. Just some super bullish news catalyst. The Fed comes out and says, "Oh, just kidding, guys. We're actually going to cut rates 6 times this year." Again, I don't know if that's going to happen or not, but anything like that probably will launch these markets to absolutely stupid numbers. It can literally happen at any time. Just keep that in mind. Okay. All right. So HZEN here, 430 to 5 for the buy zone. Again, that's right around the EMAs and that structure. Targets going from 8 all the way up to 1050 here. You could go much higher if you want to. I mean, this thing could go to 40, 50, $60 easy. Wouldn't shock me at all. 150% gain here. ETCG, so kind of stuck in between this structure line right here and then also this downtrend line. So anywhere between, I'd say about 930 to up to 1320 could be a good area to buy. And then obviously once it gets past that white line with a candle close, it would break out, test the 1730, test the $20 area, and then sky's the limit after that. So we'll take a look at levels beyond that once we get to it. Okay, so maximum potential move here, roughly about 120% ETH-E. So we are kind of stuck going sideways in this move. Based on the timing of the cycle, I would say this is a big fat accumulation zone. This is not perfectly at the bottom like back here, but again, it is not really all that high off the lows either. I mean, it's a decent amount off the lows, but I mean, a 7 or an 8x in crypto off the bear market lows is nothing. I mean, you could have probably essentially thrown money at just about any of these coins at the bear market lows when Bitcoin was at 16,000. You'd probably already be up like a 10, 20, 30x. I wouldn't be shocked. Maybe even a 50x at some point. In some cases, in some of these cryptocurrencies. So, a 7, 8x really isn't all that much. But regardless, looking for somewhere around the EMA. So 2460 to 2860, you could even go as low as 2320. Maybe you get a wick down there or something, with targets going from 36 to this cup and handle target at 52 for 130%. Now, if you wanted to wait to get it down here at 1830, you could. You can see it didn't stay down there very long when it was down there. I don't know that it's actually going to go back down there. I'm just going to be honest with you. Based on the timing of the cycle, it's very, very unlikely to get back down to that level. But, that's the risk you take. Okay. If you're waiting for lower prices, you may not get the lower prices. You might be sitting on cash for nothing. And you may just have to wait till the next bear market, or you can just get in at the price you get in at, and then it goes higher like you think it's going to, or you can get in at the price that you think it's at, but not quite as low as you want. And then the price ends up dumping anyways, and then you could maybe just have a second opportunity to buy. It's investing and trading is very complicated. So anyways, GBET, roughly about 530 to 750 in this case, I would say is a good area to buy. So in between those two zones, you can see a lot of price action in there with the target up at the highs at 32. So nice, roughly about 6.5x, 505% gain, FILG. This thing's mostly just going sideways here, as you can see. That looks pretty sideways to me. It's not perfect, but that's pretty much what it looks like. So I'd say a good area to pick some up anywhere between 44 to 60. Keep in mind this green box is probably going to serve as some pretty strong support there. With the all-time high being at about 400. So assuming you manage to catch it down there and ride it to the all-time high, you're talking a 10x at that point, 755% gain at GLIB. Inverse head and shoulders pattern again. Again, the neckline on this isn't perfect, but you have kind of an overcut. Again, that is Wall Street trying to manipulate people out of their trades. That's standard for the markets, believe it or not. It's just simply how it's done. So 31... 31 would be the inverse head and shoulders target. For those of you guys that day trade that understand what I'm talking about when I say smart money ethics here, Wall Street overcutting and undercutting like down here, that's just the cost of doing business. You know what I mean? If you get stopped out of your position because it ends up ripping, like let's say, I place my trade on this red candle right here, and then I think it's going to go lower, or well, let's not say that. Let's just say I place my trade short here at this white line because I think it's going to go down. And I put my stop like maybe right here above this candle. Well, guess what just happened? If I was like, let's say I shorted here and I was waiting for it to go like down to this green box down here, and then it comes back up, and it would have stopped me out right here. Okay. That's completely standard. That does happen in the markets. That's simply how they grab liquidity before they send it in the opposite direction. Those of you guys that know what I'm talking about know what I'm talking about. If you don't, you might want to educate yourself if day trading is something you're actually interested in. So anyways, GLIV 12 to, I'd say about 1470 on this one for buy zones. We still got to get above the EMAs, above that neckline on the head and shoulders, 80 for the all-time high as the target for potentially about an 8x move here. About 575% gain. G-Link. I'd still say somewhere around the EMA, so 75 to 95. Here you could also take a look, maybe as low as 65, maybe a wick down there or something. But again, we're moving pretty close into this new administration, so I would say the likelihood that we're even going to get a dip down there is pretty small, unless CPI comes out really bad tomorrow, which I really highly doubt is going to happen. Okay, so 220 for the target here for G-Link. Nice little 3x move, about 190% gain. All right, GSOL still holding at that 20, so 16 to 24 on this one, with targets anywhere from 80 to 115. It's always possible it could go higher than that. It really depends on just how explosive this all season is going to be. I think it's going to be pretty good. I mean, like probably better than the last two all seasons that we've had, simply because of how bullish the crypto narrative is coming in. So 627% gain here. GXLM, nice hammer candle so far, at least. That's very bullish, especially off the EMAs. So anything from 36 to 40, I would still say 36 to, well, maybe 36 to 42, somewhere in there as a potential buy area, and then targets ranging anywhere from, let's just say 70 all the way up to the all-time highs at 96 for about 160% gain. Let's see here, mana. So anywhere in between these white lines, so roughly about 10 and a quarter to 20, with the target being all the way up at 70, so about a 3.5 to a 7x. Not bad, right? I mean, 570% gain. If you only had a couple $1,000 in here, down here at 1,000, or not 1,000, at $10, and you rode it all the way up to 70, I mean, you just turned $2,000 into 14,000. That's not bad, right? Okay, so Zcash, I would say probably somewhere around the EMAs. You can see a lot of wicks going on there. So 5 to we'll put it up to the white line. So about 5 to 630 here, and targets going from 960 to about 1030 for about 105% gain. And I will tell you guys this, okay? I think the CPI, and again, I could be wrong about this, but I think the CPI is probably going to come in lower than expectations tomorrow, and the markets are probably going to rally on it. Again, I can't guarantee it. I don't know what the data is going to look like, but that's what I think is going to happen, especially considering how a lot of these signals suggest major oversold levels right now, which means usually the contrarian move is at play, okay? The smart money wants everybody in the space to be bearish and be like, oh, God, it's going to zero. We're going down minus 50%, blah, 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 right? That's when they come in and buy the deals. Wall Street will come in and buy the deals, and they will fool everyone. And all of a sudden, guess what? The bull train's on again, and nobody even saw it coming, because that's just simply how smart money fools people. I've been trying to teach you guys that forever here. So it's all about mentality. It's all about psychology. But yeah, that's what I think is going to happen. But if for whatever reason it doesn't, I'm not concerned about it, because the administration we have coming in is going to square all this crap away, and we'll be done with all of this nonsense soon enough, and the Fed can finally cut their stupid rates, and we can be done with inflation, right? And the inflation story can be dead, and we can go back to a normal way of life. That'd be great. Do you agree? All right, so anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.